Good afternoon, everyone. It's actually Chris from Celsius ATR as well as Axel. You can find us on the website, Twitter, Instagram, as well as Discord. We use this adaptive algorithm for side market, up market, as well as down market. We had a balanced week this week. Remember to check the YouTube channel. Its weekly video is for free and the outlook for the coming market. And this is for educational use. Let's go to the first slide that I have up here. And I said, let us check if the S&P as well as the Nasdaq or the Russell, is there going to be cracks in the dam which holds water in the concrete, and we're going to get some kind of a small reset due to the different sectors in the S&P, which is the 11 sectors, as well as the Nasdaq 100. So most importantly, we're going to trade what we see, not what we think. I am using an 18 simple moving average, a 34, and a 50 simple moving average. I put the cloud instead of from the 18 to the 50. I halved it in half to give you that average in the middle so that we are on the weekly showing that we are starting to run away train in the S&P 500. Even going up to 6,000 is possible. So we're not going to be biased or even getting to 58, 90, 6,000, 6,012 and coming back down is okay. Or if we end up retracing back to where the breakout was in the S&P 500. Remember the COVID February 19 to the March 23rd and the 2021 high. If I take that distance from here to here, or the distance from 2022 low and high, I duplicate it to the top, we have reached 161% to the upside in the S&P 500. Let's go to the next slide and let's talk about gold. Gold, whether you use the E-mini GC or the micro GC for people that have a smaller account, you can use the micro GC or the electronic traded fund, which is the GLD in gold. If I take the 5-year range, eventually we kind of did a 4 tops, and I called this low down here on GLD as well as GC, and I drew a downtrend channel. I said this is the cup, this is the handle of it, and eventually we're going to break out. And we got the breakout around the 178 area in GC, and we never looked back ever since. And we duplicated the distance. If I take the distance from this high to this low and I duplicate it to the top, we are almost at a high. Are we running away from the 18 simple moving average? Yes. We consolidated here for a couple of days and rallied up. We consolidated here a couple of days and we got a breakout. That's 200% in the last 5 years that GLD or GC has broken out. So pay attention, even if coming back to a retracement creating a rounded bottom and continuation, that would be healthy in gold. But remember, gold is a hedge position, usually on the short-term ranges when things go globally or domestically wrong. Let's go to the last but not least. I have Ethereum as well as Bitcoin. I put this on the daily chart, and we mentioned that actually on the breakdown. If you draw a downtrend channel on September 29th, the breakout here, and I said pay attention to this backside of this channel. If I draw an uptrend channel, we're going to have a higher one up here, but this one is already tested the uptrend on the Bitcoin and Ethereum, and we're looking to see if there's going to look above and fail to the backside of this open cone. You can see it. We can test this backside, fall back and create a round bottom and continuation, or do we run away and continue to break up to the upside on Ethereum and Bitcoin? Let's go next. Here I put the weekly BTC in Ethereum, and I'm showing that there is strength and confirmation of an uptrend. Short term is up, midterm is down because we're a little bit pushed, and the long term is still on the long term up. We are holding the 50 SMA as well as the 18 down here. When we looked up, this weekly bar pushed up towards the uptrend channel. You can see it's now coming to the backside of it, testing it, fell back in. If there's going to be continuation, second target would be those 2 areas. And if I take the distance from this high to this low here on the head and shoulder, you can see that's the shoulder, that's the head, that's the shoulder. And if I look at it and I duplicate the distance from here to here, it's from 1 all the way to 3 to the top. Even coming halfway up here is great and healthy in Bitcoin. If you cannot do BTC, do the micro BT or do some ETF, GBTC, or MSTR in the electronically traded funds that are part of Bitcoin. Let's go last but not least. Remember to check us out at Solstice or at axelatr.com. You can see I put it here. And if you have any questions, let us know. Let's go to the first slide, and we're going to go one by one looking at some of the things in the sectors. Let's do the Nasdaq Micro NDX, and I'm going to do the NDX first. Boo boo here. I'm going to do the Nasdaq 100, and I'm going to go back here in history for at least more than 3 years. I'm going to do a 5-year historical return to show you that the COVID-19 and the March low, if I duplicate it till 2021, or taking the distance from this low to this high from the 2022 till October 10th of 2022 lows before the 2023 rally, creating a cup. This is the rounded bottom. This is the cup of it. And eventually we broke up. And I put this zigzag pattern. We came back down, rallying up. I did not do 100% the retracement. Do we look above or fail, or do we continue higher? I am a little bit on the edge due to the Nasdaq, because I'm going to show you the daily how it looks like, because we have been in consolidation here in the last 5 days inside range. We are in balance. We're just sitting above the 20,275, let's call it. If we're going to look above and continue to get to the upper prior high here, or do we fall back into the 18 or the 34 or the 50 simple moving average? We're going to trade what we see, not what we think. And what I'm going to do is take a look at the micro ES S&P 500, and I'm going to do the measuring tool for the S&P 500. Remove the drawing. We're going to go to an intraday, and I'm going to do this on an intraday basis. We're going to use 30 days, and we're going to use 6-hour chart. And we're going to use the measured move to show you that there was a lot of consolidation here. Consolidated, broke up, and we had 5 days in balance. If there's going to be balance and continuation in the S&P 500, do we visit the 6,000 or 5960 area 70, or do we fall back in because we are wedging? You can see here, if I zoom in here, you can see that we are in an up wedge. We did that roundabout, came down and pushed back up on Friday, but we are inside the range. Let's do the measured instrument from up here, which is the high for the week. The low for the week was down here. Let's take a look. This is Sunday. You can see it. This was the Sunday low. You can see the low here was 58.15 here, 58.50. Either one that I use is okay. If I extend this to the opposite side, and I'm going to go back till 9109 and push OK, I'm going to see the extensions to the left side where the ranges are to the upside or the downside without being biased. Even coming back to the 50 SMA or F5 is okay. And if we fall back between the 80 and 20, that's a buyable position because there was a lot of consolidation here. And if we break up, I'm going to look for the 180 to the, and the 200 to the upside in the Nasdaq 100. Let's take a look at the in the S&P 500 micro NQ. And I'm going to look at it the same way. I'm going to get rid of this one. This was from last week. Remove the drawing. You can see that the consolidation in the Nasdaq after those 3-week balance, we looked up. You can see we pushed in this area and eventually broke up, but we had a more of a balanced range, symmetrical triangle wedge in the Nasdaq 100. If there's going to be continuation, we got to pay attention to it. If there's not going to be any continuation in the Nasdaq, so what I'm going to do, take the high for the week and the low for the week, and I'm going to extend it to the left, edit the property, and I'm going to extend it till 9109-14. And you can see the extension where the 0 line is, and 50 minus 80 minus, even coming back to the 200 or 116 is healthy. But if we're going to get a breakout and we're going to look to the upside, we're going to pay attention coming back through the 125, 138, then the 150. This is a VPOC up the top. This is a VPOC at the top. I left them open. This is the 180 and the 200 to the top in the Nasdaq 100. So what I want you to do, remember, is what we see. We're going to ES and micro, ES plus micro NQ. And the reason why I wanted to do this to show you on the daily, sometimes when you're paying attention to the overall market, the consolidation, the W pattern, and that rounded bottom in this consolidation, if there's going to be continuation, I'm going to pay attention to it. But on the daily, I'm watching that 18 SMA. If I zoom in here on this area, and what I want to do is pay attention to that 18 SMA. If we fall through it, does it act as support or resistance, or do we fall back to the 34 and the breakup of this consolidation, or do we get to the 50 where it catches up to it and gets a bounce, or do we fall back to the 116 and F3 before continuing higher? So I am very cautious about the overall market because the high of the S&P and Nasdaq is just right above us. Do we test above and continue, or do we look above and fail on the backside of this channel? Even if I draw auto channels, I want to show you how to do this. We can draw auto channels like this or to here. You can see it's the same number. And if I can draw one from here to here, that's another auto channel up this way. Or if I take this one to here, that's a little bit sharper. And what it would do, will catch up. Let's edit this property. I want to make, edit the property. And I'm going to make this a little bit more smaller dash lines. And you can see where the sharper one catching with the the 50 SMA. What we can do, make it a little bit larger and change the color to a little bit on that side. And you can see where that trend channel and the 50 coming in inside that wedge. And I can leave that one alone because edit the property. What I can do is make it purple, the same color, and make it a little bit more dash line. When you're changing this time frames, you can see that we are in the wedge. We are still in an uptrend and consolidation. Do we look above this area and break this area to continue, or do we fall back into the 18 SMA, eventually 34, and the 50 SMA, which will catch up to this area here? Does it find support, continue higher, or do we fall back to the 116 simple moving average and the F3, which will catch up from the highs and lows on the S&P and the Nasdaq 100? If you have any questions, you want to check us out, give us your commentary, let us know what you want. Get in contact with us. Take care. Over and